Hi dear viewers, I'm Akif Mateen. I'm welcoming you all from Tripplepips Financial Market Services and Analysis. So, last week we have posted this video where we had clearly shown our market aspects on different currency pairs, including US 30, gold futures, and also on USD JPY. So, what happened to that? Let's first of all take a look to that and some of the performances we mentioned on the previous week according to the news. Also we had some discussion, so let's take a look. Hello, sorry. Okay, so let's just take a look. So let's go to the market first of all. We uh, on the previous week we had informed you through our live analysis on the Sunday at this time that USJPY should continue the downtrend move, and the possible nearest liquidity zone it needs to touch is nearly, we actually draw a box over here, and what we seen that after a week that it harshly fall down to this level. Even the market closed on this level, so that's the power of liquidity, dear viewers. That's the power of liquidity. If you actually can know how to track the liquidity, so obvious reasons, you can actually grab the market moves and make some bucks in your pocket. So that's what actually we were eyeing for. So on USD JPY, according to our analysis on the past week, as we shared, that it should go on bearish to this level, and surely it did. Now, what was our logic? We also mentioned that at what scenario this move gonna have. Like, for example, if it exceeds this level, which is this zone, uh, and go more bullish, then the bearish trend won't continue. Whereas it actually did continue in the bearish side, and it actually didn't went any of the significant move on bullish side USD JPY past week. So analysis actually could happen. Now let's have a look back to the gold. Okay, now for gold, on the last week we had shared our point of view that if the market creates any closing above this level, which is 1934.5, or let's just say 1.34.7, so the market may continue to reach the target at this level at 1.68 or something. What it actually had done is that market moved up to 1962, which is let's just say 275 pips from the entry price, for a potential entry price, as we mentioned. you know so it's also a significant positive side according to our analysis, that gold moved according to what we expected, bullish. Now we also had mentioned that if the price could close below these levels, we also had drawn, and then only it could continue more bearish up to this level, but it did do that. What it did is that it closed H1 and H4, both of the candles above this level, and eyeing on this buying side. So what will happen next week, we are going to come in a very short notice. Just stay tuned with us. Now about the US 30. Now last week we informed you before the start of the week that there is a liquidity zone on this level, so there's a high chance that market may touch it and then go bull. And if it's go bull, then we won't take any kind of entry at these levels. Only if market closes above this level of point, which we are seeing is 34050, 34,050 level. If any H1 or H4 candle closes, then only it will go bullish and may touch to the previous high potential level of 34,580, with with which is actually got touched last week, grabbing the opportunity for 520 points move, which is I guess a very significant move. I guess if you followed our analysis, you would surely make a huge movement of profit from US 30. Now, we also informed about GBP USD, that it needs to go bearish, but only if it closes, below this level, or let's just say this level. No, it was not that kind of, yeah, it was this level, and if it closes that, this was target price 1, and otherwise it was target price 2. Otherwise it may continue its bullish tone, and which it actually did. It maintained its bullish movement, as we saw for the last week. Now, also, in previous weeks we have seen that we had some couple of news, like, significant news on England, I mean British pound. Also, we got some significant news on US dollar. We got some, okay, so yeah, I enabled the chat feature right now. So anyone who wants to text us while joining, they can uh, they can actually say. Let's see how it's going. Yeah. So here we are. So if anyone wants to say any questions related to it, you can you can you can you know chat over here. Let us know so that we can answer you right away. But eventually, for now, we are actually been describing so far that how our past analysis and the performances worked. And we were getting back to the last week news about the USD news, which was actually on Thursday. The unemployment claims report seemed a little bit low, which was positive for US dollar. And also we had seen RNBZ rate statement. We had seen CPI news, to be exact, been gone less than the even actual price, and also less than the forecast. That what actually made US dollar a much weaker in the previous week. We also had claimant count change, which turned you know a little bit negative for British pound. So let's get to know how the market's gonna be in the next week, because we have G20 meetings all day today. You know, right now, when I'm actually been on the live right now with you, at this moment G20 meetings is gonna happen, G7 meetings is gonna happen, like something weird thing is gonna come up, and we are expecting some geopolitical movements according to the meeting decisions in the coming days. Now, while on Monday, bank will open, without the Japan, because on Asian session Japan won't open up because it's Japanese bank holiday. But after that we have CNY, Chinese industrial production news, which if gets less, then yeah, on the very start of the week, US dollar may get a little bit bull pressure. We have ECB President Lagarde's speech, and also we have G20 meetings throughout the whole day. And on US session, we have Empire State Manufacturing Index. Now on Tuesday, in the very Asian session, we are having Australian dollar monetary policy meeting minutes. So we should expect some significant move on monetary policy meeting minutes of Australian dollar. We also have CPI of Canadian dollar on that particular day, along with G20 meetings whole day. And also we have retail sales report of US dollar along with core retail sales report. Now on Wednesday, we have New Zealand dollar CPI, pound CPI, US dollar building permits news. And on Thursday, we have unemployment and employment report of Australian dollar. We have unemployment claims report for Australian dollar, likewise on every Thursday. And on Friday, we have Canadian retail sales and pound retail sales. So Last week we had US dollar CPI news. This week we have been CPI news of pounds, of you know Australian dollar as we're speaking, and also on New Zealand dollar. And moreover, we have retail sales report of US dollar for a pound, and I guess for obviously we have employment report of Australian dollar, and we have Australian dollar monetary policy meetings on Tuesday. So we have some potential liquidation expectation for Australian dollar pound this week other than US dollar. So let's see what news awaits us. Now on the news section we should describe a news here. It's been stated that the Fed's difficult decision at July's FOMC meeting. So here, if the Fed is true to its long process data dependent mantra, we hope it is, and it is difficult to justify another increase in the federal funds rate at this time. But as we speak, at this moment, US dollar been, I guess, where is the news? I've been picked it up. Oh yeah, here it is. That Biden administration forgives 39 billion in student debt for more than 800,000 borrowers. That means as we are speaking, G7, G20 are all aligned in a meeting, been discussing also about Biden administration forgiveness, data-driven policy, but expecting to work on something totally adverse of that. Now if the Fed is going to be totally data driven, then they would not spoke any terms of increasing interest rates, because the inflation situation of US dollar has been worsening due to different job scenarios, and also about the rigorously printing money for Ukraine war, and to fund its allies. So overall, it's been a very tough time for US dollars. So at that moment, rising in interest rates not only exaggerates the situation, into more chaotic, but also it enables to have some negative feedback from the citizens as we speak. But the administration right now had got to very much keen to focus to neutralize that negative issues from the people. So that's why I guess they not only they actually made I hope that they don't actually make this decision on only data driven policies, but I believe that this decision has been made on politics and people related politics, political assumption. These kind of decision has been made. So but what is the effect of this kind of situation? The effect of this situation is kind of like that, is that US been printing money, Biden as administration been printing money, and you know uh, helping or aiding Ukraine, and also some of its NATO allies. But as we speak, the yeah, as we speak, the Biden administration has been printing money, has been forgave 39 billion in student loans. So obviously, a matter of pressure needs to be injected into US economy as a negative, because on the last week tone, if we say on gold, this harsh bullish movement actually says so, that US dollar is becoming a weak on the current context. Now, if we see about let's just say on another news, which has saying that China has some GDP news and also retail sales news. So a lot of things depends upon this, because annual GDP growth is expected. I mean the forecast should be like this. Now, what could be the scenario? Last month it actually been reduced, later according to its forecast, but we don't actually know what performance it will do. Now, US retail sales has been continuing to a little bit rise, but this thing is not gonna say that it's on the verge to rise. Well, yes, it is on a previous, portion, but it's not from here. So, inflation expected to resume its decline in June after stalling in May. So, they are expecting on UK consumer price index to be more bearish. Now, as we see, the inflation in Japan report that the CPI has may not, have a peak moment yet. Now, let's jump into another news. Okay, on 16 July, it's news on G17 meeting. So financial leaders from the G7 countries will hold talks on July 16 on sidelines of the border of G20 meeting in India. Now G7 groups are these: support from Ukraine, multilateral development banks reform, and international taxation will be discussed at this meeting. Multilateral development banks is to to reformat the US dollar and banking operations, I guess. And G20 under the chair India will discuss the global economy and health insurance, sustainable finance, infrastructure, and many other things. Now G20 member India is also member of BRICS too in some cases. So it's been kind of like a war zone of meetings, as we can say. But let's see how the meeting outcomes. Now in this news on Charles Schwab, we can say that on September 20, it may rose to 4.8, clearly. Now, all indicators that the Federal Reserve is likely to raise its target range for the federal funds rates by another 25 basis points is 5.25 to 5.50. So they are eyeing on more interest rate hike on the coming days, but when they haven't been declared. Also on the Wolf of Wall Street, there's been a report from Wolf Richter that US dollar status as global reserve currency on slow long-term decline, but not going down in a straight line. So that's what actually they mentioned. It's not a like kind of like straight line. It's just many different curves. Now US dollar assets held as foreign exchange reserves has been increased. It's been decreased on kind of like pandemic situation, and after all the Russia-Ukraine war, now it's on a verge to increase a little bit, but with low space, I guess. Now, U.S. positions of allocated reserves end of the quarter versus Euro, RMB, yen, and GBP. We can say still on the top, but and there's a huge gap. But we don't know if any of these countries gonna climb back. And according to the dollar index, it's been on a verge for a decline too. But recently, it hiked a little bit. It yeah. Last year it went nearly 115, and after that it actually been pulled back a little bit down. For now, we have a weekly forecast, scenario suggested from a website. So let's also have a look because it's been provided by Mr. Justin Bennett from the dailypriceaction.com. And here he has been telling that US dollar index has been on a verge of great fall, but it has some support over these lines. So for that Euro USD, as DXY is intended to go more bearish, so it has the potential to go rise on a bullish tone more. That's what actually he is being eyeing for. And for GBPUSD also, he is saying that there is a resistance, but it's been up a while, so yeah, there is a chance that it may take the support zone and then go up, or go up and then come back harshly to on the support zone. For USD CAD, he's been eyeing on to have a sell pressure down here, and he's also saying that there is a support over here on the daily time frame, so there's a high chance it can get a resistance over here too. So for gold, he's been telling that yes, it goes got a little bit bullish, but it has a support over here on 1930 to 1940 level, and then it is a potentiality to test the resistance at 1960 and 1980 level. So from Bank of England, it has been told that inflation must be conquered to regain public trust. Okay. On the main inflation figures, Bank of England put rates by full half point, which is 0.50. Now, they have been rethinking relations with the Treasury because there had been some, miscoordination between monetary and fiscal policy, with which they wants to return to quantitative easing positions. So yeah, that's what we got from pound. Here on 2022 stress test, it's been telling that US is still UK bank stress result, and UK is reflecting strong capital profitability. So that's what actually I was telling you on the news a bit while ago. I have shown that there has been some significant curves of foreign reserves, but it actually, there's a high chance pound, if can get this kind of strong capital profitability and also can maintain up to 1 or 2 quarter next, there's a high chance that yes, it can be shoot above as a reserve currency. Now dollar dives in a dovish week, stocks, bonds, gold, and crypto soar. So here is another report from the zerohedge.com, and it's been telling some good things on indexes, on Bloomberg, and also uh, they've been telling that Bitcoin pushed up near 32,000, plunged to 30,000. So it also put a the performance report of Ripple and other cryptocurrencies too. So that's how we can tell about the news segments we could speak of. Now let's back to the chart. Okay, I want to chat for right now. Okay, so on the chart, let's go to AUDJPY first. Now on AUDJPY, it has a huge possibility to be continue on the bullish side, because we are feeling this as a, let's just say, box of liquidity on H1, because we've previously seen that this zone has acted as a support and then as a resistance over here, and it again regained the position on this level. So what's gonna happen here? We can tell that if it let's just say if it exceeds any closing over this level, it may go bullish up to this level, and for sell side, if it closes any H1 or H4 below this level, there's a high chance that it may touch this level, more precisely to this. Now for the bigger scenario, the target 2 for bullish lies here on this liquidity level. On the bigger scenario, on the bear side, the second take profit is actually on this position. So here we can say on H4 that on RJPY we can have say that there could be some box kind of like formation. So on here the price may act like a, in between these kind of boxes, which actually values from range of 94.5 up to 95.5, 100 pip. So in between these 100 pips, I guess the market will make indecisions, and when breaking any of these levels, has the potentiality to touch on the bullish side. TP1 could be 96.2 and TP2 or final TP could be 96.8, whereas on the bearish side, if it any H1 or H4 candle closes below 94.5, it has a potentiality to touch 93.8 level and later on 93.3 level. For gold, we are eyeing on an opportunity. So previously we had told that there's an opportunity that it may touch on 1970 level and later on it may touch 2050 level. Now for the next week, we are eyeing on two kind of possibility. One, when the dollar may get stronger on the Monday, if we see that, we will see that the gold touches this level, like 100 or 170 points downwards movement or spikes. And later on, if it gonna exceed any H1 and H4 closing above the level of, let's just say, 1968 level, then there's a high chance that it may touch this level up to 2050. So we are eyeing for a bullish move if the H1 or H4 closes above 1968 up to 2050 level. Now on the bearish side, we will have to be very much careful that if any price may not get close below 1921 level, which is this, yeah. So below this level closing may actually tends to bearish momentum establishment, because here in this zone we believe there's a high liquidity, bullish liquidity, which actually turned uh, the price of gold over the weekend on a bullish tone. So I guess there could be some spikes that close or movements the price along these levels, but in the end, if it closes above 1968 level, it may touch up to 2050. Whereas on the bearish side, if any candle closes below 1910 level, then only it can go bearish. On the TP1 could be 1858 and later on it could be 1805. Okay, so for US 30, we have seen a similar bullish liquidity that actually upheld the market last week, 500 plus points. Now, thinking about how to get, you know, whether to know if it goes more bullish. Thing is, if the price regains, some consolidation move on this kind of sell level, let's just say on 200 or 300 points, and then if it closes above 34,600 level, then only it has a potentiality to touch 35,000 level, 35000, this level. Yes, I guess, yes. But if it actually, triggers some move on here and then closes below these, let's just say 34,000 level, then it's sure to go bearish side up to 33,500 level. So we are telling about a harsh move down like here, up to here. More than 600 points for above. We are eyeing for 400 points or something. Yes. So that's what actually we have been discussing about the potential buy side movements and sell side of OR JPY. We had discussed on USD JPY. Sorry, have it not. We have discussed on gold and US 30. Now we will discuss on USD JPY and also on pound. So for USD JPY, likewise on our JPY, we believe that it has to create some box kind of like structure in, let's just say over here. Now the box here looks like kind of like this. Yes. So any kind of candle closing above on the H1 and H4 above this level can initiate bullish trends up to this level, And if it initiates any bearish candle below this level, there's a high chance it may continue to regain its bearish side up to the mentioned levels. So let's zoom a little bit in so that we can get a clear idea. So we are talking about that if the price of USD closes above 139.8 on H1 and H4, it can go up to 143 level, which is 340 plus pips on USD whereas on the reverse scenario, if any H1 or H4 candle closes below 137.2 or let's just say 3 level, there is a high chance it may touch the bearish liquidity of 320 plus pips bearish up to 133.9 or let's just say 133.8 level. So that's the bullish and bearish scenario. And in the meantime, if the price ranges below here, make spikes and many other things in between these range of like let's just say 250 pips, I guess please do not engage, because in between these 250 pips anything can happen, and there's a high chance in next week market may move a little bit with more liquidity than the previous week. So we are expecting a good high chance of gold buy on touching and crossing 2000 levels, or on side below it may go nearly up to 120 level or something, 115 level. Same thing goes for USD same, harsh liquidity, bullish or just bearish, whatever side it may move, we are expecting a huge uh, liquidity movements on these currency pairs in the upcoming week. Because if the price closes harshly, above this zone, is the TP1, the TP2 could be 35,500 level, which is actually been like 1,000 point than the last week closing. So yes, that's what we are actually eyeing for. Or let's just say if it closes below this, so nearly 12,000 points is gonna move for US 30. So we are eyeing for a big liquidity movement on every kind of currency and uh, trading instruments in the market. So for GBP USD, there has been some newses. So it actually created a box like structure like last week, like over here, and I believe that the box structure may continue more like this on M30. Now on H4, okay, okay. So for GBP USD, if any price closes below this level, it has a potentiality. This could be the TP1, and this could be the TP2. Okay, again, and if for the bullish side, if the market closes above this level, so when I say closes, I mean H1 and H4 both candle closes above this level, then there's a high chance that the price may continue to go at least for this level. So for GBPUSD, we're talking about a huge zone of bullish up to 100 pips, up to 280 pips, and if it goes bullish, there's a high chance that it may go up to like 200 pips above. So let's see what happens for the next week, folks. And don't forget to subscribe our YouTube channel and also contact us on Telegram. And obviously, for every week, we are gonna come to you every Sunday, explaining you the market scenario and discussions related to many currency pairs and trading instruments. So stay tuned for us, and don't forget to subscribe and put like. So good analysis here. So thank you, guys. We are actually been trying to tell you our previous week analysis and how we can actually opt the best out of the market. So please follow us and also share other people, so that they can join to our movement and also grab some pips from the market. So stay tuned and have a nice week and have a nice good week ahead. So thank you. Bye. Have a nice day.